There we go. Okay. I'm just admitting more people in, so we shall start. And okay, guys, happy Monday to you guys. Now, most of you guys I've met on Friday. It was definitely a great event. Thank you very much, guys, for the energy and your participation on Friday. It was a great turnout. Thank you very much for that. Toby, thank you for organizing all that as well. And also for you guys attending the webinar today. Today is the 8th of August, 2022. And we've just got a lot of things going on in the market, but we never fail to actually pick out the right instruments to trade for the day. So this is what the Mondays, Wednesdays, and Fridays webinars are for. It's actually to help you, guide you through the trade plan, but most importantly, to scout and find out opportunities for the day. The most important is to pick the right instruments for the day to trade. All right, so this is what I'm going to be guiding you weekly on Mondays, Wednesdays, and Fridays, especially on from 11 o'clock, 11 a.m. our time, right up to 11:45, 11:35. That's the usual time, but usually I give it a space anywhere between 11 to 11:30 to start. Okay, so there you go. All right, guys. Once again, thank you very much for your participation, and we shall now analyze the market a little bit. But one of the most important thing that we will be looking at the very beginning is always to scout the market on sentiments, the feelings of the market. You know, whether it's a risk on, risk off. I'll explain all that as well. But one of the best thing to do is not to jump onto your technical platform doing a technical analysis or what you think as technical analysis straight away. We need to slow down first to understand what are the trends, what are the hot instruments that are actually being moved by the big boys as well, and also to take a look at what are the events or especially economic data releases as well as big speeches by the big boys as well. So here, this is an economic calendar. Of course, on the dashboard of 10 Academy, we will have all the tools ready at one place for you. So you'll be looking at your heat map, your economic calendar, do your calculations on the lot sizes. Everything else will actually be done. Everything, not everything else, but everything will be done in one place, which is the 10 Academy dashboard. Okay, so that will be ready very, very soon. We'll have that announced and launched once it's launched. So let's take a look at the whole week, because this is Monday's week ahead sort of plan ahead and review of what is best to trade following what's been moved by the market as well. So as you can see, we had a question on Friday by one of the participants as well, and he asked me, why is it that sometimes we have got some shock on Mondays, and Mondays suddenly move, but most of the Mondays don't actually move too much. Like today, for example, we have got data releases here that are not really there. But sometimes, even though we have got no important data releases on a Monday, suddenly Monday has got major movements. Now, I want to tell you that this is mainly because we have had some big news or big data being released on the weekend. You see, so sometimes we do have countries like Japan or even Switzerland and some other countries that have got these very important meetings, and they are usually classified or categorized as important meetings on a Saturday or a Sunday. Now, the Japanese, they just love to have all these meetings on a Sunday. So some very big financial meeting amongst bankers in Japan can actually happen on a Sunday and Sunday morning. This is just their ethics of work, and the way they actually have done business is to have meetings, very, very important meetings, governmental meetings on a Sunday. So with that, we can actually then experience some movements on a Monday. So as you can see, Monday, August 8th, which is today, as well as tomorrow, August 9th, Tuesday, we don't really have much data, especially the medium and the high impact one, the orange one, as well as the full red bars. Now, the red bars, of course, it tells us that the volatility could potentially be quite high. for that country. Especially here, you can see that tomorrow we have 1, 2, 3, 4, right? So we've got 4 data. Now, the old way of doing things, or the not right way of doing things when it comes to the economic calendar, is when you are only looking at the results and waiting for the results, and then based on the results, you are actually trading. This is a very, very risky way of actually using fundamental or data. Well, I don't call this fundamental analysis only. I just call this data releases by, economically by various countries. Okay, so they are part of fundamental analysis, but it's not the main way to analyze the market fundamentally, right? So fundamentally, as I've mentioned, it needs to include geopolitics as well, needs to include some, how we call that, the impact of natural disasters and various other things, okay? Right. Okay, so far I guess you guys are clear. Now we have got data coming from China, Germany, as well as the US. All right. So the one that comes from Germany, because it's part of the EU, it would then impact the euro. Right. So we would see that we have got Chinese data, which is CPI. Now, this whole week we have got CPI data. So the CPI data would actually be one of the most popular data releases after the NFP, right? So the CPI stands for Consumer Price Index, but nowadays we are calling it the CP line, as in line, because we don't really get the exact data accurately all the time. So there's a lot of manipulation by politicians, economists, or, I mean, in general, countries do manipulate their data quite a lot. So hence the reason we're not supposed to just look at the data releases results and based on the results to actually trade by it. It's going to be very, very risky doing that. Right. Okay. So now we've got the consumer price index of China. Now, what does that tell me? Hence the reason, it's really important for you guys to follow the PRICE trade plan. And for me and Toby and the rest of the instructors in Bratton and TenTrade and Ten Academy, basically we are the ones that would actually do lots of research to give you insiders information. That is what the I stand for, insights and insiders information in the PRICE trade plan. Okay, so here, for example, I'm going to give you guys a little bit of a tip. When you guys are looking at important or very highly impacted data from China, what that means is that it's got a lot of connection with Australia as well as New Zealand as well. And also it's got some impact on gold's movements, of course, together with Bitcoin especially. So this is basically what insiders information is all about, is to give you that extra edge to connect the dots properly, so you can then understand what pairs to look out for trading opportunities as well, right? So here, for example, what I would actually look at a lot is to look at whether or not the consumer price index or whatever that is happening economically, especially in China, would impact the antipodian currencies first. The antipodian currencies are your New Zealand dollar and your Australian dollar, right? So they are called antipodian currencies. So it's just because of the antipodes, they're located at the antipode geographically. They are called the antipodian countries or antipodian countries with antipodian currencies. So we've got Australia and New Zealand. Now, you guys know as well, I would think by now, that Australia and New Zealand, Australia especially, is the biggest trading partner of China. And that goes both ways, imports and export. What that means is that all the minerals that are available, especially, you've got some rare earths as well. You've got all those iron ore, or you've got those, sorry, not iron ore, but copper, aluminium, and all these kind of precious metals as well as minerals are used for industrial usage. And this is where Australia exports a lot of these minerals to all over the world, but the top most importer is China. Then China buys it most from Australia and then creates finished goods from it and then sells it to Australia, and Australia being its biggest buyer as well. So this is where we need to really understand the connection between what moves in China would actually impact Australia and New Zealand. Why New Zealand? Because New Zealand is like a little sister of Australia, right? Or a little brother or sister of Australia. So whatever Australia does, it has to be shadowed by its movements by New Zealand, right? So this is how it actually works. So that triangular sort of mechanics can actually be adopted into our trading, whereby we can make a mental picture when we looked at China releasing some very important data, or if you look at the news and you hear something big has actually happened in China impacting its economy or its politics and various other things, then you know that you need to draw a triangle in your mind's eye in China connected to Australia, Australia connected to New Zealand. Then you need to have this triangular, because this is where we can actually find opportunities to trade, especially for Australian crosses and New Zealand crosses as well, because the volatility would actually be created by the Chinese data as well as its currency's movement. Because the Chinese currency has got two main currencies, right? You've got the offshore and the onshore. So they are going to be impacted quite dramatically sometimes, depending on how dramatic and how important the data has been released or that current event in China. So how much impact it would actually create in within China would then spill over to its biggest trading partners, especially Australia. But then Australia would then impact New Zealand's movement as well. Okay, guys, so you guys now understand that we can actually look at fundamental analysis, a very small part through the economic calendar, through data releases and speeches as well, but then to actually learn how to connect the dots to find trading opportunities. Now we go back to, we go further down, not go back, but go further down, and we can see that there are two other rate bars, and these two rate bars are for the US dollar. It's for the US, which impacts US crosses. And if it impacts US crosses and we have got data like this impacting the US dollar, then what would we do then is to actually connect US dollar with all the major crosses. So major crosses are are pairs that would include US dollar. So the ones that does not include US dollar, like GBP JPY, is not a major pair because it does not have US dollar in it. You see? So now we know that we have got USD crosses to also watch out for. So what I would do at this stage, usually from a fundamental perspective first, using the economic calendar, is just to connect the dots. For example, to write in my little note on the side, okay, we've got important CPI of China. So that arrow would actually connect to Australian dollar, Australian crosses and New Zealand crosses. So we need to look at Australian crosses, New Zealand crosses. Then we look further down, we look at the US releasing the CPIs, and they are categorized as the rate bars, very important, high volatility as well expected. So then what I do next is to write down US crosses, or in brackets, major pairs. So I want to look at all the major pairs as well. So when I say I want to look at them, I would like to then go on to the heat map. So what we will have on the TenTrade's dashboard as well is a heat map, as well as various other tools. For example, like the top movers and the currency heat map. We've also got a volatility chart right here. So what I would like to do for now is to look at the top movers and also the heat map to match up with what we have gathered in terms of information in the economic calendar, right? So in the economic calendar, there is a focus at the moment on, give me a sec. There is a focus at the moment on Australian, New Zealand crosses, correct? And also because of Chinese data, not because of Australia or New Zealand's data, because we need to connect the dots, remember? So then now we also have to focus on major pairs. That means pairs that would actually, Forex or currency pairs that would include the US dollar. So now I would go on to the top movers first to look at what are the top movers that are actually moving at the moment? What are the preferences of investors and traders onto which currency pair? So now you can actually connect the dot. And you see, we have connected the dot fundamentally earlier on, right? And you can see that on the top two itself was an Australian cross. Okay, and Australian versus JPY has got sort of the clearest trend because it's got four dots on each one. It's got one dot each on each time frame, as you can see, the 4 hour, the day, the weekly, and the monthly. So what I would do next is I will write down on my little note there, I want to look at further or analyze further on AUDJPY, right? Because AUDJPY here, as you can see from 1 to 10 as well, you can see that Australia crosses dominates that whole positioning of 1 to 10 top movers, right? You can see you've got 1, 2, 3, 4, 5, 6, 7. Okay, so 70%, for example, of the interest has actually gone into Australian crosses. So this is how we pick the right pair as well, and we need to focus on the right currency in order to pick out the right currency pair. So now we know I've written down Australian crosses to look at. I've also written down New Zealand crosses to look at. I've also written down US crosses to look at. So hence the reason you've got some USD, only one USD cross here, but then loads of Australia, what do you call that, crosses here. So now if we go back to the economic calendar again, if we look at for the week ahead, because we've only looked at Wednesday, we've only looked at um, Wednesday, for example, and we've not even looked at Monday, Tuesday. But if you look at Monday or even Tuesday, you don't actually see any Australian crosses here, right? So this is telling you that the market is already ready for Wednesday. So Wednesday, it's going to be a very high impact market, mainly driven by Australian crosses, mainly because of Chinese positioning, right? So the Chinese positioning as well as US data releases would actually stir this volatility onto the Australian crosses and the New Zealand crosses, right? So this is the way for us to actually plan ahead. So it does not mean that when you look at no trading opportunities in terms of news releases on that particular day, there is no trading opportunities. There's definitely trading opportunities starting now. And mainly, maybe it's Australian dollar versus the JPY as we have seen, but we have to do a trend analysis to make sure there is definitely a strong trend, as well as for us to be in time to enter and exit the trade as well. All right. So I hope you guys got that little gist of how we actually analyze the market. Firstly, fundamentally first, just from the economic calendar, we can actually gather this kind of information to help us pick the right type of data. All right. So you guys are clear so far? Everything is okay? All right. Good. Okay, good. All right, John. Thank you for that. So anybody has got questions so far? Anything that I can help you guys with answering any questions that you have? If it's not very clear, there's areas that I've touched upon and you want me to rewind or go back to it, just let me know. Okay, or anytime, just ask questions. All right, so we'll leave that side of it. You now understand that side of it. So what we can actually then do is to also look ahead, and we can see that as I've mentioned earlier on, Wednesday would actually be the start. Tuesday night itself usually would be a start of more volatility picking up, and then we get all the reactions of the news and stuff like that. Then Thursday, we have basically Thursday, August the 11th, we have some data right there. As you can see, we've got New Zealand. And this is another tip for you guys. Whenever you get Chinese data, then you get a follow-up of Australian data, you will always have a follow-up from New Zealand and Australia, which are the antipodian currencies. So this is what I would like to highlight to all traders is we always want to look behind the curtains, behind what you can actually see, where are the dots to be connected. So now we know, okay, we've got Chinese data, we need to always connect the dot to Australia and New Zealand. That's number one, right? Later on, we'll take it further to intermarket analysis with the other markets like Bitcoin, gold, to what extent, and various other things. All right, so we have got Thursday, they are medium impact, but I could say that there may be a follow-up of major currencies, major pairs, especially the ones with US dollar, because we've got some high impact right there, but then medium impact as well, jobless claims and all that start to follow up on a Thursday. So I think we will definitely have US crosses moving more. So we need to look at US crosses. Now, so far from this analysis, we have not looked at Japanese yen, for example, crosses. We are not looking at Japanese yen, not looking at CHF, not looking at any other currencies at this moment of time. Why? Because the market is as such, is gearing up towards specific currency pairs as well, and specific connected currency pairs. Okay, so now as we move along to Friday, August the 12th, only then we see a pop-up of new currency that could actually be quite volatile and move, maybe experiencing a lot of movement, and that is the GBP. We've got a long list of GBP data, but we've got the GDP for the GDP, right? So the gross domestic product data is quite a big data as well. It tells us how healthy the economy is, but then the GDP is also connected to the CPI and all other data, including the jobs market, employment and unemployment as well. So it is a very heavy data and is actually very important as well. So because we have got a list, sort of a longish list of GBP data right here, even though it's medium impact, we could see that it would actually be building up the momentum and the volatility for the British pound. Okay, so we can see some British pound at the end of the week, maybe from Thursday onwards. We could then see GBP opportunities trading the GBP as well as the US dollar or the US crosses, because we still have got the Michigan CSI, which stands for the Consumer Sentiment Index, which is actually quite a heavy data, mainly because of the state of Michigan's industrial type, what do you call that, industrial, maybe a bit of commodities as well involved in the state of Michigan. So it is one of the sort of thriving states in the United States. Okay, so that's quite an important data that we will get from the Michigan Consumer Sentiment Index. So this is where we can then know, okay, what's our focus on which type currency pairs and what are the connected type currency pairs, right? So now, as we can see, because we have got movements, data releases in the United States, that could also then impact the movement of gold, okay? Because it doesn't move the other way around. It doesn't usually doesn't impact gold directly, but what happens in the States would have that bigger percentage of impacting gold's movements, because it's politically, economically, what happens in the States has got a lot of connection with what moves gold. Okay, so I hope that's clear for you guys so far on the sentiment side of it. I have also outlined gold's movement, and we will take a look at gold movements. But what's very important right now is to maintain our focus onto Australian crosses. Okay, this is the most important thing. Let me just see whether I have got, okay. Okay. So what we do next is let's take a look at some tools, especially besides the top 10 movers. Now, we've got the top 10 movers, as I've mentioned. We have got Australian dollar as of today versus the Japanese yen. That's been moving quite a lot today. Apparently, it's giving us hints that it's got quite a clear trend, but we don't know that as yet until we do our own trend analysis onto the TenTrade platform, MT5 platform on technical analysis. So, or a trend analysis first before we do a technical analysis. So what we'll do next is we'll also just take a look at the currency heat map to give us a little bit of a hint of what goes on with Australian dollar, New Zealand dollar crosses, as well as the USD crosses, and whether or not we have got some surprises in the market with strong moving or clear trending currencies. This is what the heat map is for, to give you an indication of which currency matched with which other currency will give you trading opportunities. So now, for example, if I look at the USD heat map, we have got a mixture of colors, dark red, and then we've got light red and light blue. We would like to see a column which are filled with mostly dark reds or dark blue. This is where dark red and dark blue shows us the strongest trend. Okay, dark red means that it is very bearish. That means the market's on the downside. Dark blue gives you the indication that that particular currency or currency pair would actually be moving to the upside much more. Downside for dark red, dark blue upside. So I'll give you a sample here, for example. Now, if we look at JPY and we look at this column here under CHF, CHF stands for the Swiss franc, and this one here stands for the Australian dollar. What this means is the Japanese yen on the 4 hour, the daily, and the weekly chart, it's very, very weak against the CHF. And the JPY is equivalently very, very weak against the AUD, which is the Australian dollar. So what that also means is that CHF is much stronger than the JPY. The Australian dollar is much stronger than the JPY, right? So what that also means is that whenever we look at JPY, JPY needs to be seen as a safe haven, right? So what that means is this is probably a very risk-on market. I will explain why it's a risk-on market. But firstly, I'll explain what risk-on market is. We have got two types of market, risk-on or risk-off, right? Now, risk-off market means that people in general, traders and investors, they want to turn off their risk appetite. That means they want to be less risky, right? If they are, if it is a risk on, that means they want to be more and more risky, right? So risk off, they are not wanting to be risky, but risk on, they want to be risky. They want to take chances, they want to take the risk, they want to go on to what do you call that, non-safe haven type currencies. So now, because people are selling off the JPY, that means there are risk on, because they are not putting their money into JPY. Usually when something happens in the market, some calamity, some risky things, maybe COVID and various other things, then they will put their money into safe havens. And there are three safe havens that are very predominant in the market right now. Number one safe haven is actually the US dollar. At this moment of time, we're talking about post-COVID or in the COVID times, US dollar has turned into becoming an even stronger safe haven because of the COVID, right? Hence the reason we are looking at uncertainty with the gold market and uncertainty with the gold prices, only because the dynamics of the US economy and the US dollar have actually changed drastically, right? Mainly because of their hyperinflation, but then actually it's called stagflation. Okay, it's not hyperinflation, it's stagflation that they are going through. So inflation is going crazy. You've got issues with the yield returns of the 10-year bond and the treasury yields and various other things. So this is basically making them dynamically. When I say dynamically, it's got a lot of other reasons than the logical reasons to create inflation in the States, right? So there's a lot of other unmentioned things. Hence, the reason is really important to actually check with us and for us to deliver our insights and insiders research, because we do our research in our team, every single day, and be really, really wary about how the market really operates. Okay, so how they operate and what their agenda is, it's usually hidden from the public's eye. So we need to understand that very, very well. So we have got three sets of safe havens that are the most popular. We've got the US dollar, of course, now. We've also got the JPY, which is the Japanese yen, and also the CHF, which is a Swiss franc, right? So if we see that these three are actually having the market going up for it, let's say the currency rates for USD is going up, the CHF, the JPY, then we can say that it is a risk-off environment, which basically means that traders and investors, they want to be more careful, so they transfer all their assets onto safe havens like the USD, the JPY, and the CHF, right? So now it does not look like a risk, what do you call that, off environment. It looks like traders and investors are willing to take the risk because they are selling off the safe havens. They are selling off the Swiss franc. They are selling off the JPY, right? So this is an indication right there. So this does also look like they want to put more money onto risky assets or maybe onto the US dollar as well, because if their interests are not onto safe havens, that does also mean that uh, it's very likely we won't look at in an increasing rate for the price of gold, okay, because it functions as such as well. Gold will tag along the interests of traders and investors into safe havens, because gold is also a safe haven there, right? Okay, I hope that is clear so far for you guys. All good so far? Yeah, clear. Okay, so what I would also do is to write or type CHF process, Australian dollar process. So here it looks like if we are looking at JPY, JPY is best paired with CHF and AUD. Okay, so this would then give us opportunities on CHF JPY and AUD JPY as well. So AUD JPY would also be one of the pair that I would be looking at, because it turned up to be the first in the top 10 list earlier on when we look at the top 10 movers. Okay, let's get back to some questions. Yes, you're right. I'm at the cafe because I've mentioned it at the very beginning. So I'm using the microphone at the moment, but can you guys hear me loud and clear? Because most of the time I'll be out and about as well. Okay, good. That's important. All right. So as long as you guys can hear me loud and clear, see my screen, because most of the time I'll be out and about. I'll be outside. As also sometimes at the event, I'll be doing my webinars as well. So it's very difficult to get a quiet room. It's not difficult to get a quiet room, but it's just because of the timing that I would need to be out at the time, out and about as well, most of the time. Okay. All right. Thank you, guys. Good. So far, if it is clear, this is the most important thing, is when it's clear for you and you ask questions and you get what I'm saying and then you apply it onto your trading. So you guys can actually start applying it, as of today, to look at opportunities as well. So let me now do a little bit of a trend analysis for you on one pair, and that's the AUD JPY, because what I will do next is me and Toby and the rest of the instructors will be researching the market all throughout the day and giving out signals of which pair would actually be good for the short, medium, and long term as well. So then all the community of traders out there will be getting our insights and our signals and our reviews on a daily basis, but on an hourly or few hour basis. So Imagine this: if I am actually looking at the market and then I see that there is an opportunity for something, or I need to warn you of something, I'll probably just quickly do a short video so that you get that insight straight away. All right, so I'll be like sort of reporting live type thing, and then I'll inform all the instructors as well, and they'll be able to also deliver that message. And that message is usually on a trading day from Mondays to Friday, because the market is active from Mondays to Friday, and not in the weekend. Okay, all right. Okay, good. So what do we do next? We'll take a look at AUDJPY, because hints are giving me, I mean, from hints, it's just giving me more clues that AUDJPY needs to be looked at. And then what we can do the next time around is for me to guide you on how you actually find other pairs that are correlated to one particular pair. So you can actually always analyze currencies first from their countries, economies, and things that are going on, and then you pick pairs, and then you match these currencies with other currencies to make it a pair that is best to analyze further. So now we would like to analyze AUDJPY, and I'll give you a little bit of a hint of how I do that technically. Now, firstly, I would like to let's take a look at AUDJPY. All right. Now, firstly, it's not a technical analysis that I'll be doing. I'll do a trend analysis first before I do a bit of a technical analysis. Now, we do a trend analysis to confirm whether or not we see a clear and smooth trend for short, medium, and long term. Now, how we do that on AUDJPY, firstly, you need the three lines. These three lines are your exponential moving average. Very, very simple. You click onto insert, you go onto indicators, you go onto trend, because I would like to go through the long way. Of course, you got shortcuts later on, but I want you to look at the four categories of indicators right here, right? So we want these lines to be only trend indicators for us, not to cross over or cross under for us to enter, because I've never used these strategies to actually, use indicators to enter the market, right? They are only for trend purposes, trend indicating purposes. So what you do next is you go on to moving average, right? Make sure you apply three types of exponential moving average, right? So this is a moving average right here. Now you want to apply the 50, the 100, and the 200, okay? And you want to make sure your method here, you need to change from your simple to your exponential, okay? Exponential right here. So you start off with your 50, you just type 50 right here, right? And then make sure the apply to is always in close, and you can choose the color, any color you want, as long as you know the differences between the 50. Like for me, I've got the blues, but then different shades of blue. So the lightest one is my 50, the lightest number is 50, so the lightest color as well. So I've got my 50 here, and then I've got my 100 in the middle, and then I've got my 200 right there. So once you have got the three lines flowing like that, this is how we can do a trend analysis. No other indicators are actually necessary at all. But what you need to do, the key, is to create a story. Now, that can only be done if you are comparing three time frames, three consecutive time frames. So for practice purposes, I would suggest for you guys to pick the 1 hour, the 4 hour, and the daily. All right. So what that means is we start off with the 1 hour chart, and we try to look at what is the trend for AUDJPY on the 1 hour chart. Now, you need to look at two things when you do a trend analysis. This is a trend analysis. Okay. If the trend is not clear, is not strong, we simply forget about this currency and move on to the next currency pair or the next instrument to trade, right? So we don't waste too much time in the trend analysis side of it, and usually could be done in within 1 minute, 2 minutes. So it just takes a little bit of time at the very beginning, but then once you are familiar with it, then that's it. Okay. So here, for example, go on, right? And we need to look at various things. We need to look at three major things. Number one, we want to look at the way, we want to look at the cluster of the current candles, right? The cluster of the current candles needs to be either above all the three lines or under all the three lines, right? So if it is above all the three lines, what that means is that it's got a bias of uptrend if it's above all the three lines. Now, the second thing is that three lines cannot touch each other or being entangled. They need to flow very, very nicely and very clearly. Now, if I zoom in a little bit, you can see that it's not flowing upwards like my fingers going up. It needs to follow the cluster of candles. If the cluster of candles are above the three lines, that means it's biased to the uptrend. But the trend is not strong enough or not clear enough if the three lines are not separated to one another and pointing to the sky. So here on the 1 hour chart, only the candles are good, but I see that it's not very strong or very clear, the trend, because of the moving of the three lines. The three lines are not good on the 1 hour. But what we need to do next is to look at the 4 hour and daily as well, to look at what the 4 hour and daily would actually be telling us as well, right? But one of the simplest trick to look at as well is when we look at the uptrend, we need to look at the previous latest candle movements to the left as well. So if I zoom out a little bit, I can see that the current price now at 94 level, that means $1 Australia equivalent to 94 Japanese yen, is actually approaching a resistance or a possible reversal. Why? Because if I look left, the one that is so significant is this area here. So what I do is that I always draw a red line indicating the resistance, two lines, usually on the highest body of the candle, and also at this peak here, I can see a highest wick of a candle as well. So I've got always two lines. You need to always have two lines to indicate a zone. So it needs to be a reversal zone as opposed to just a single line. So here, for example, when I draw that two lines, from what I can see on my screen on the left, this is the most obvious significant drop of price. So this is a very strong resistance area right here. So I have drawn two lines indicating that the Australian dollar may actually reverse. So there is no point for us to look at buying on the 1 hour chart, mainly because it's already begun to reverse, right? So the market is telling us we have got a reversal going on Australian dollar. The Australian dollar prices is actually falling against the Japanese yen. So we may be looking at a very significant drop as well. Why? Because if we look to the left, we have got a mother candle here indicating a possible drop of price until the end of this candle here, the closing price of the mother candle. Now, for me personally, for the past couple of years, especially, I've noticed that one of the best strategies when it revolves to candles is the opening price and the closing price of major mother candles, big mother candles. So this mother candle, for example, the one that you can actually see here on Australian dollar versus the JPY, let's see how many pips it's worth, just the body of the mother candle. Now, the body of the mother candle is about 68 pips. It's quite significant. Anything above 50 pips or so can be considered quite significant depending on the time frame. Of course, maybe we'll see a longer mother candle on 4 hour, daily, or weekly, or even higher time frames, for example. So there is a possibility of a drop of the Australian dollar dropping as opposed to rising because of the participation in the past of big sellers. The big sellers are actually evaluated and measured from the size of the body of the mother candle. Okay, so this is very, very important for us to understand. So here, this red line here at the closing price of the bearish mother candle, I will always color it blue to indicate potential support. So this is where price could start to actually go up as well in this area right here, the closing price of this mother candle here. So this is only an evaluation of what you call that on the 1 hour chart. But potentially, if, for example, we have evaluated Australian dollar to actually be to the downside for now, maybe it's a correction, but overall, it has indicated to us that we've got a bit of a upside type movement, right? For Australian dollar versus JPY. But at this moment of time, there may be a reversal potential, maybe a price drop of about 50 to 60 pips for it to come down to the 93 area. Now, whether or not it is a trading opportunity or not, this is dependent on yourself. If our marked areas or zone that could potentially be a trading, what you call that, area or a trading opportunity, but it is your decision to actually decide, because it's the same way when you want to decide on the lot size as well. It has to be dependent on your trading capital as well, right? So now on the 4 hour chart, let's say we are on the 4 hour chart. Now we have got a backup of that mother candle as well, but that mother candle on the 4 hour chart closes a little bit sooner than the 1 hour chart's mother candle. So what I will do then is we need to also mark a sooner area, which is at 93.40 instead, right? So I would take that exit, for example, a little bit better, because higher time frame gives you better and bigger data, right? So it's a little bit more reliable compared to data that you get from lower time frames, right? So I usually like the 4 hour, daily, weekly. The 4 hour onwards would actually be good for us to analyze the trend, the size of the mother candles as well, right? Okay, so if we were to look at 4 hour chart and the same mother candle right there, and we pull it right down here, okay, and that is about 70 pips or so, about 73, 74 pips, right, downward. So there's definitely some say selling opportunity from what we can actually see between 1 hour and 4 hours. So now if I were to actually bring it to the daily chart, I can see that to the left we have got indeed mother candles, bearish ones, because the white ones are the bearish mother candle, the selling ones. And then we have got a giant one here as well to the left, right? And then we've got one more here. So what does that mean? That means we've got 1, 2, 3 single long mother candles that are very powerful, that has actually happened in the past, giving us a hint that it may want to sell more. You would like to sell again and repeat that structure of selling again this time around. There is a potential. So it looks like we have got a little bit of a reversal going on also from judgments from the current candle having the wick getting longer at the very top. If it's got wick at the very top getting longer, usually it gives us the hint of exhaustion going upwards. So the body is getting shorter, the wick's getting longer at the very top, pointing out to exhaustion going to the upside. All right, so this is basically it. We want to keep it really simple. We want to look at what is the market giving us, not the other way around. We don't want to make up guesses. We need to have the market communicate to us. So this is your screen to the market. This is basically your window to the market to actually get all the right hints. And we also have patterns we can confirm. We also have price psychology, psychology of numbers. So there are various things to make our decisions a little bit more solid. But that's just a taste. On the trend analysis itself, you are able to look at whether there's a reversal going on despite the fact that AUD JPY is on the upside. But is it on an upside with a strong trend, clear trend, smooth trend or not? All depends on your timing when you are looking at the market at this time or at the time that you're looking at. All right. Okay, guys. Any questions at all? Any questions? How many of you are actually already on your life account at the moment, maybe with some funds, and you are looking at trading today? If you're looking at trading today, I would probably be looking at a little bit of selling of the AUD JPY, especially on the 30 minutes to the 1 hour chart, I would think. And you can actually look at it dropping at this moment of time. But from a psychology of numbers perspective, this is not a very good price to actually sell. So what we would be doing at our end, will be giving you tutorials on the right prices according to psychological numbers as well. Is it's at 93.94. So I would, for example, personally look at 93.90 before I make that decision. So anywhere from 93.90 onwards, then you can see it falling much more. So that would probably be an ideal entry point, would actually be not at 94.00, because that is a psychological level. That is where you would be taken out sometimes. So it's better to actually trade a sell at 94.00, 10 pips below 94.00. So 93.90 would be sort of an ideal selling area if you're looking at selling, right? And then here, for example, not at 93.40 that you should be exiting. I think it would probably be better to exit at 93.50 and above. 93.50 and above. So whether it's 93.55, 93.60 would probably be much better. Okay. So you've got about, I think, about 30 pips or so to look at in this, if you are actually trading at the right price of AUD JPY. But we'll take a look at the market and then we'll see. So here, for example, for a 30 pips, 20 to 30 pips opportunity, I would think it's probably best depending on your trading capital. If you're trading, let's say, with 100 US dollar, you can actually look at a one-to-one ratio for now, meaning if you are looking at an opportunity of 20-30 pips, then you will equalize that for your stop loss as well at 20-30 pips. But if you're trading at a bigger trading capital, let's say 300, 500 and above, then we could look at 1-to-2 risk reward ratio, for example. We can actually look at slightly double or more than the expected pips to be your stop loss. But at this stage, for you to actually get familiarized with the strategies, get familiarized with the way we analyze the market and the way we enter and exit using psychological numbers as well, and with a smaller trading capital, it's probably best for us to look at a one-to-one risk reward ratio. So if the potential, let's say, just as an example, let's say from 93.90 and then you want to exit at 93.60, that's basically 30 pips. So that's 30 pips potential for your take profit, right? So then if it's a risk reward ratio of 1-to-1, that means you want to also risk 30 to 40 pips. It's entirely up to you if you want it to be slightly more than the potential as well. But this is basically to measure and to keep you having trading capital for your next trades as well, in case this one here come to a loss. Then we need to actually evaluate other pairs that has got higher probability. Now at this moment of time, I would say that the AUD JPY's probability is about 50-50. The reason for that is mainly because of its trend analysis itself has not given us a clear trend or strong trend on all three time frames on the 1 hour, 4 hour and daily. It was only at the 1 hour chart that we seen something, and then it mismatched sort of with the 1 hour and 4 hour. But then from the candles perspective, it looks like it's doing a bit of a correction. So for those who want to anti-trend trade, you can do so, of course. That's why I've given some tips there of selling opportunity on the AUD JPY based on the 30 minutes and the 1 hour chart. Okay, so there you go. The other thing as well is, if I were to look at the strength of the trend, I would use the average, the average directional movement index, which is also called the, I don't change anything usually. I just leave it as it is in terms of the settings and the parameters, and look at uh, here we would need the level 25 to be inserted. So you click on the levels, you add the number 25 in there, right? Very simple. And then you click OK, right? So now you look at it trading above 25. So that basically means whatever the trend is, it's actually reasonably strong. So on the 30 minutes is reasonably strong on the upward type trend. So there's a little bit of movement to the upside. But then what if we look at the 4-hour chart, for example? Now on the 4-hour chart, that uptrend is very, very weak. So hence the reason there are opportunities of a reversal. So hence we talked about a little bit of selling power going on, maybe for a very short period of time, maybe 30 minutes to 1 hour plus, that kind of time range. Okay, so this is basically it. All right. That's just my take of the market on a very simple anti-trend trade as well, because that's what's available on AUDJPY. Even though we've seen it to be uptrend and all that, but then as of now, as we are looking at the market, it is weakening a little bit on the upside. It's got a little bit of a selling opportunity through the reversal that is getting that is just getting in. But we will look at it. We will look at it, and we will monitor the market as well, and we'll talk about it. If it at all hit the TP or not hit the TP, we'll still evaluate it and look at how we can actually keep improving our ways of trading it. All right. Any questions, guys? Okay, I've got one that I've not answered. Yes, of course. We can, Papilo will take a look at GBP USD. Are you, Papilo, you are the one that I've spoken to, right? You're already trading on the live market, I think. And you've got a live account as well, correct? Are you looking at GBP USD for today? We can definitely take a look at that. Give me a second. Brilliant. Okay. Thank you for that. Let me just take you through GBP USD. We'll do a trend analysis first. If we find anything, then we'll do a technical analysis and further get into it. Okay. But in my guess, it'll start to pick up tomorrow, day after tomorrow, mainly because of the fundamental analysis that we've done. You know, on the economic calendar, we see that I think it was Wednesday or Thursday only, or Friday only, that we have got data releases for the pound, right? So, okay, let's take a look at the pound versus the US dollar. All right. So what we'll do, Papilo, is we'll leave the ADX on as well so that we know the strength of the US dollar. Let's also look at, let's compare, let's do a trend analysis by comparing your 1 hour, 4 hour, and daily, right? Now, here, for example, very quickly, I can tell you just by monitoring the market that it's very much towards a down market at the moment. Now, we have got all these very strong mother candles, bearish mother candles on the left, right? So it is driving prices down because it's got previous sellers are targeting these price zones as selling opportunities as opposed to buying opportunities. But also when you look at the prices right here, they are now trading at 1.2075. Now, there is a problem here with the price itself. 1.2075 is very close, 5 pips away from 1.2080. Now, 80 is your psychological numbers. Now, we will guide you and train you on the 4 sets of psychological numbers basically used to enter and exit the market, right? So they are also support and resistance levels as well. They're very, very accurate. They are about 90% plus accurate. I've been using this for the past 10 over years, actually trading using psychological numbers, right? So now, for example, if we are trading on the sell side, we need to wait for the price to drop under 2080, at least by 10 pips. So what that means is that we have got 1.2080 as your psychological number, right? If you are thinking of buying, it is best to always buy 10 pips above the psychological number. If you are selling, it's best to actually sell at the price 10 pips below the psychological number. So the psychological number here, one of the psychological number is 1.2080. 80, the last two digits is 80. 80 is that psychological number, right? So if you are going to sell or thinking of selling and the price now is very close to 80, you need to minus 10 from the 80 if you want to sell. So 80 minus 10 is 70. So what that means is only at 2070 and below would actually be a good or ideal selling zone. Understand? One second. I think I was doing something. I was doing something. Your drink and my drink. I left there. Fine. All right. Sorry about that, guys. Okay. Is it okay? You good? Call me. No problem. All right. So sorry about that, guys. I was just looking for my drink. Okay. So here, for example, we have got 2075 now. So if you are thinking that it's going to be dropping more, it would be best for you to wait to get that confirmation until it drops to 2070. Then you've got that stronger indication. But there are so many other ways to actually look at whether or not it's got the power to sell. In my eyes, it's got power to sell as well, mainly because you've got this mother candle right here. So if at all the price of GBP is going to drop now, it would actually be dropping and dropping, but you would need to exit before it goes here, the closing price of this mother candle, which is 1.2027. So the best ideal price to look at exiting would actually be at 2030 at least. We will have lots of tutorials on knowing how to exit and enter using psychological numbers. Okay, it's going to be cutting your risk by at least 40%. All right. Okay, there you go. So now this is the reason why you can see that it's actually moving quite reasonably well on the 1 hour chart, mainly backed up by this previous mother candle in the past, because the mother candles are quite powerful with packed up decisions of selling in the past. So a lot of traders, they like to actually sort of mark their zones, you know, of where they have sold or bought before. And that's usually from the mother candles of the past, especially on bigger time frames like 4 hour, daily, weekly, and monthly, right? So now if we just go on to the 4 hour chart, you can see that yes, if prices were to come downwards, we have got also a bullish mother candle here with an opening price right there. So what that means is that maybe if you are thinking of selling, it's probably better for you to sell, but to also exit before 2037, maybe 2040, maybe 2038. That's entirely up to yourself, right? But then these are lines that could prove to be support level. We'll evaluate all this on live market, and then as it happens, give you screenshots to prove to you that this is what happens in the market. Happens or not happen, it's you to evaluate all that, right? So here we have got an upward movement as well by a bullish mother candle. So that basically means that if you want to sell good and well enough following this mother candle on the left, the most recent bearish mother candle, but it might actually be reversed because of that mother candle that have actually bounced with the opening price at 1.2038. All right, so there you go. This is basically it. So as it moves upwards, we'll talk about the upward movement later on, but because now it's more biased to the downside, it's got some reversal candle, pin bar type candle as well that is stuck onto the moving averages. So it's an indication that some reversal may be actually happening. On the daily chart, it's giving us the hint and clue that the pound versus the dollar is biased to the downside anyway. Why? Because you see the three lines are actually just flowing like a river, but downwards. And also you've got a lot of lower highs. You've got lots of lower lows as well, right? I also see a pattern, a geometric pattern as well, which is very nice, but I won't get into that right now because we want to go to the basics first of certain things, especially the trend, because we're doing a trend analysis first. This should actually be your base, right? Juice. Thank you. So now, if we looked into a downward market, there is also an area of 2020, 1.2020 that we need to look at, and that is a psychological level. But I'll just point out to you of where the money flow is based on, let's say, the weekly or the monthly chart. Now, if we go into the weekly chart, you could see that we have got selling opportunities right here, and previously by mother candles, right? Now, this is what our eye could actually catch when we are actually looking at it as a whole. This is the most recent one here. So we just focus on this area right here. So for me personally, there's definitely a chance of prices drop. When I say a chance, I mean an opportunity, but I don't mean certainty, right? So there is a chance for it to drop, but there is a chance for it to actually reverse upwards sooner than this area here. So that is the opening price of that bullish mother candle. So there is a gap of selling opportunities between 40 area right down to 1.1667. So that is that selling opportunity I see. And this is what I can actually see happening for the pound, is more to the downside as opposed to the upside. Okay, so that's basically my take on the pound at the moment, but mainly based on short to medium term at this point of time, right? So we've got the selling opportunity right there. I hope that makes sense for you, Papilu. Is that okay? I don't see it happening very fast though, mainly because that fall may happen, but happen periodically or slower than the pace, mainly because I don't see the blue line of the ADX here to be above the level 25. It's under the level 25. So if it's under the level 25, that means the strength hasn't really picked up yet. It would probably be picking up above 25 only, right? So then it will be faster as well. That drop with that mother candle would actually be faster. But if we go on to the 4-hour chart, no, we don't have that as well. We don't see that blue line above the level 25. If we look at what do you call it, daily as well as the same. So that also shows me that it may actually be gearing into either a sideway market or a little bit of a bounce upwards. But then overall, generically, it's biased to the downside. It's quite weak on both ways, up and down. So I think we would actually be looking into a sideway type market quite soon as well, right? Maybe it's waiting for a bit of clarity economically as well from the economic data side of things. So we need to also monitor the news pickup from the from the okay the news pickup on GBP and the conditions, economic conditions as well, or any other risky events or risk events that will be happening in the UK as well, right? Okay, guys, questions, please. Before we end the session, it's probably best for me to get your questions also on, for those who are thinking of opening some trades, either for the AUD JPY and the GBP. I mean, if you are comparing between AUD JPY and the GBP, I think there are some, clearer, better selling opportunities on the AUD JPY, only because it's also at the top 10 of the top 10 movers as well, and it's indicated quite clearly and strongly on trends as well on the heat map. So there you go, especially Australian crosses, and AUD JPY is one of it. But here we are looking at selling opportunities of AUD JPY. Anyone thinking of trading the AUD JPY at the moment, or already started trading AUD/JPY? Now, this is the magic of it. You can actually know there's no need to monitor it. Like for me, for example, I would like to trade the AUD/JPY. So use this. Thank you. Use this live trading account right here to actually trade it. So let me just try. Okay, let's give it a bit of a test. Now, let's say I would like to trade it. It's already at 94.02, so 93.90 would actually be an ideal price. Um, Immediate volatility. Ah, sorry. Pending order, you change it into a pending order in terms of your type of order. And what you do is make sure you key in your right lot sizing right there. Let's say it's a sell stop that I prefer. Just as an example, but we'll be guiding you to the type of orders that fit it best in the event. Okay, so now here, your my stop loss, let's say it's 30 pips up because it's 30 pips down that I wish to take. So my stop is 93.60 will be my take profit. My stop loss right here will be at, let's say, 93, 90. I go up by 30 pips or so. Let's say maybe about 35. Let's say for me, let's say 94. Okay, 94.25. So 94.25. Okay. 93.60 take profit, stop loss 94.25. Let's say as an example, we just want to test this through. Let's see, sell stop. It's not lighting up for me. Maybe it's the account. No. Maybe it's a price as well. Let's see. Take profit price. Not kidding the price, that's one. All right, yes. So it's 93.90. There you go. Now we've got it there. Okay, and okay. So that's just a sample right there. So we'll take a look and see what happens with this one here. I've got my stop loss as always, take profit as well, and we'll see whether or not that materializes into a profit or a loss. And we will actually be planning ahead of whatever happens, whether it hits your stop loss or your take profit. Okay, so that's it. And what I usually do is I don't really monitor the market after I've actually done the pending order, because if I have actually gone through the price trade plan and I've done my due diligence and go through the analysis of both fundamental and technical, then I'll just plan it out like this and I leave it as pending order. So I would end up having 3 to 5 trades of pending orders and just basically monitor it from time to time, or maybe at the end of the day, and just to have more time to myself to do other things, because it's just not necessary for you to actually monitor the market all day long, because it will not go any faster, it will not go any better as well if you are actually just monitoring the market. Okay, right, so that's basically it. Okay, any questions guys before I end the session for today? Anybody who is going to be trading this AUDJPY today at all? That's 30 pips. If you are trading, if you're trading at $1 per pip, that means you will be making $30 or losing $30. Okay, so that's basically it. 30 pips, but that 30 pips can actually be gained in a very, very short period of time. Yes, we shall all check it out and see what happens, right? But you know, after maybe after the US Open, we'll probably be looking at more marination of price in the market. We'll get a better, clearer picture as well. It's a little bit early for the US market as well. We've got London and European market just kicked in. So it takes a little bit of time, especially on a Monday. And it's a very slow Monday, especially we didn't have any news within in the weekend to actually push the market today. All right, guys. So that's it, I guess, for today. If you guys have got questions, I'll just wait for another 3-5 seconds. And if I've got no questions, we'll end the session for today. But if you guys have got questions, connect with Toby, connect with us at Ten Academy as well, and then we shall come back to you with answers to your questions. Okay. All right, guys. Take care. Thank you very much. Have a brilliant trading day. Happy pipping. No questions? One more time. Going once, twice, thrice. Any questions at all? How many of you are going to be trading the AUD/JPY or the GBP USD today? Anybody? Not on the demo account, by the way. Yeah, on the real account. You want to make real money, you need to be on the real account. Brilliant. Okay, we shall monitor that together, Johnny Pio. All right. Take care. All the best. Happy peeping, and we shall monitor the markets throughout the day. Take care, guys. Thank you. And for any updates in the market, I'll be updating you guys, me and Toby and the rest of the instructors. Take care, guys. Bye bye.